Hey guys, welcome back to my channel. So today we'll be discussing the TSX Index in Canada as well as the SP500 in the US and to see which index you should be investing in. See, I've been reading a lot about the Canadian and the US market analysis online, and it seems like a lot of professionals are pretty bullish about the Canadian TSX Index for the future. That being said, on the surface, the Canadian market is nowhere near in the same league as the SP500 in terms of growth. I mean, just take a look at this. Since 1984, the TSX Index grew from about 2,500 to 19,000. That's about a 5.4% increase every single year. Now let's take a look at the S&P 500. In the same time period, it went from about 165-ish to over 4,000. That's about an 8.5% annual increase. So on paper, it seems like the S&P 500 is the clear favorite here. But wait, not so fast. Before we start, if you find my videos informative, please remember to hit the like button as well as subscribe to my channel. I make financial tips for Canadians in my long-form content and financial comedy in my shorts. So if you want to learn more about personal finance or get a good laugh regarding financial comedy, please remember to subscribe to my channel. Now that we got that out of the way, let's continue. So on paper, the US market vastly outperformed the Canadian market in the last 4 years or so. But there are some factors that can be explained to close the distance between the two markets. First of all, the graphs shown earlier do not include reinvested dividends. In general, the average yield for the TSX Index throughout history is about 3.5%. For the S&P 500, the number is about 1.5%. Now, there's a couple of reasons for that. One of the main reasons is that the Canadian market is mainly dominated by the financial and utilities sector. Companies like RBC, Scotiabank, or Enbridge. Companies in the industries that give out a lot of their earnings in the form of dividends. However, the S&P 500 is more heavily focused on tech stocks. High growth tech stocks like Microsoft, Apple, or Amazon. In fact, 8 of the top 10 weighted stocks in the S&P 500 are high growth tech stocks. Compare that to Canada, you have none in the top 10. And the reality is most tech companies reinvest all their earnings into research and development. As a result, focusing more on growth as opposed to giving out dividends to its shareholders. So if you factor in reinvesting your dividends, the difference in growth between the S&P 500 and the TSX Index is still noticeable, but it's not 3%. And here's the thing, when you go online and search for the graph between the S&P 500 and the TSX Index, it makes you wonder why you would even invest in the Canadian market in the first place. I mean, just take a look at the comparisons. It's brutal. Let's just take a look at this. Wow, look at this. This is brutal. These graphs over here just don't show any confidence in the Canadian market. Wow. But the fact of the matter is, these graphs do not show the dividends reinvested. And pay attention to the graphs over here and you'll see this for a lot of the comparisons between the TSX Index as well as the S&P 500. Take a look at this, the dates. It's a little bit deceiving. The date for most graphs that compares the TSX Index to the S&P 500 constitutes a date range in which humans are more reliant on AI and technology. Ever since the dot-com bubble in the early 2000s, the tech stocks has been on fire. So if you invested in any tech stocks like 20 years ago, you're probably living like a king right now. And that was my biggest financial mistake. My biggest financial mistake as a 33-year-old was not investing in Apple stock back in 1985 when it was only 10 cents each. Had I just invested $1,000 back then, I'd be worth almost $2 million in 2023. Unfortunately, the Canadian market doesn't really have a lot of tech stocks to show for. And if you're just looking at the dates in which tech stocks are king, you know, the past 2 or 3 decades, well yeah, then the S&P 500 is gonna look a lot better than the Canadian market. It's not that the Canadian market sucks compared to the US. Although the studies do show that, yeah, the Canadian economy does suck. But you didn't hear it from me. Geez, no hate to Alabama, but Toronto's supposed to be the nation's economic capital, but Alabama really? The same GDP per capita as Toronto?
Yes, very sad.
Anyways, back to the market. Now, there have been times throughout history that the TSX Index did outperform the S&P 500. A perfect example is between 1995 and 2005. Between October of 1995 and October of 2005, the TSX Index grew about 2.5 times. The S&P, however, on the other hand, grew about 2 times. The dot-com bubble really did hit the US market a lot harder than the Canadian market, and it took the US market a lot longer to recover than the Canadian market. Now, let's take a look at why some of the financial experts say that the TSX will outperform the S&P 500 in the next decade. 7 reasons why Bank of America thinks the TSX will outperform the S&P 500. Wow, this is cool. Certainly makes the Canadian market sound good, doesn't it? You know, reading this article, the author really doesn't tell you why the Canadian market will be doing well, but rather why the Canadian market is less risky, thus outperforming the S&P 500 in the next decade. I guess the author really doesn't have high hopes for the S&P 500 in the next decade. See, take a look at this. The recession risk is already priced into the TSX. And I actually believe this. Most of the stocks in the TSX Index aren't as overvalued, and they're not as highly demanded as the US counterparts. Many stocks in the SP 500 are highly valued right now due to the nature of tech stocks. Canadian stocks simply don't get the same hype. There's a much higher likelihood of stocks like Tesla, Apple, and Amazon being overvalued, but for Canadian stocks, the hype's just not there. There's not as much demand. So there's a less likely chance that Canadian stocks are overvalued. So when a recession hits, those overvalued stocks will drop a lot faster than the Canadian stocks. TSX earnings appear resilient. Yeah, I agree. Most of our Canadian stocks are in financials and utilities. And the utilities is key here. It's big because you're always going to need electricity and hydro. And because the Canadian market is so heavily influenced by utility, this makes our market a little bit more resilient to downturns. And of course, this article goes into politics as well, geopolitics. I guess the political uncertainty is a big factor here. With the world being so unstable and wars happening all the time recently, and the US being at the center of everything, the Canadian market might be less volatile and a safer place to park your cash. Although our government got tangled up with the Indian government recently. I'm not gonna get into the politics, but who knows how that's gonna affect our stock market. So yeah, I think the main takeaway here is that the TSX Index is much less risky than the S&P 500 according to this author. And I'm sure there's a lot of people like him that's showing some doubt with the S&P 500 for the future. At least in the short term. For the long term, there shouldn't be any issues, but at least for the short term, there could be some doubt due to the uncertainties. This doesn't mean that the Canadian TSX will be doing very well, but what people are saying is that there could be an opportunity that the TSX is a better investment than the S&P 500 for the future, at least in the short term. Now, what are my thoughts? To be honest, nobody can predict the market. So I would invest in both. Both markets prove to be a reliable long-term option, and I'm Canadian. I still want to believe in the Canadian market. In fact, in my portfolio, I not only invested in TSX and S&P 500, I invested in Dow Jones and Nasdaq as well. Alright, that's it for today. If you learned something today, please remember to hit the like button as well as subscribe to my channel. If you're looking for a good laugh on financial comedy, please remember to check out my shorts. Take care, and I'll see you next time.